Have you ever wondered why some people in the Philippines turn to loan sharks, even knowing the crazy high interest rates? It's a tough situation, and today we're going to break down the reasons behind it. Let's get into it. The number one reason is speed. When a medical emergency hits or an unexpected bill arrives, waiting for a bank loan isn't an option. Banks have a long, complicated process with tons of paperwork. You need proof of income, a good credit history, and sometimes even collateral. For many Filipinos, especially those in the informal economy, meeting these requirements is nearly impossible. Loan sharks, on the other hand, offer money almost instantly. Sometimes all it takes is a quick text or a short conversation, and the cash is in your hand within hours. There are very few questions asked and no complex background checks. For someone in a desperate situation, this immediate access to funds feels like a lifesaver, even if they know it comes at a very high price. The urgency of the need simply outweighs the long-term risk. Another major factor is accessibility. Loan sharks are often part of the local community. They might be a neighbor, a vendor at the market, or someone everyone knows. This makes them incredibly easy to find and approach. There is no need to travel to a bank in the city or navigate a confusing online application. This familiarity creates a false sense of trust. It feels less intimidating to borrow from someone you see every day than from a faceless corporate institution. This convenience makes it the default choice for many who feel excluded from the formal banking system. They feel like the banks aren't for them, but the 5 to 6 lender is always there, ready to help. Now, let's talk about the psychological side of it. Borrowing from loan sharks can become a powerful, almost addictive habit. The first time someone borrows, it's usually out of pure desperation. But when they see how quick and easy it is, it becomes a tempting solution for future financial gaps. Soon, they might start borrowing for less critical needs. This is where the cycle gets dangerous. Many people end up borrowing a new loan just to pay off an old one. This is called a debt trap. The interest piles up so fast that the original amount they borrowed becomes a tiny fraction of what they owe. It's a downward spiral that's incredibly hard to escape. The constant stress of owing money, combined with the pressure from the lender, can take a huge toll on a person's mental and emotional well-being. Family and social pressure also play a significant role. In Filipino culture, there's a strong obligation to provide for one's family. When a parent needs medicine or a child's tuition is due, the pressure to find money is immense. Failing to provide can lead to feelings of shame and guilt. In these moments, a loan shark seems like the only way to fulfill their family duties, no matter the personal cost. They see it as a sacrifice they have to make. So, what's the way out? The key is financial literacy and creating better, more accessible alternatives. Learning how to budget, save for emergencies, and understand the true cost of debt is the first step. On a larger scale, we need more accessible and fair lending options, like microfinance institutions and cooperatives that understand the needs of the community. Breaking the cycle isn't easy, but it starts with knowledge and support. Thanks for watching. If you found this video insightful, please give it a thumbs up and subscribe for more content that matters. Stay smart and stay safe.